Good morning, traders. Today I am back with a new analysis. This was requested by one of the viewers who wanted me to do an analysis on Bank Nifty, which is a index traded on the Indian Stock Exchange. But before we get into analyzing Bank Nifty, I would like to take a few moments and update you all on how the previous analysis on the Nifty index came through. So this is the follow-up that you see, the first slide, the Nifty index, which is the recap. The chart that you see on the chart is the one which I've recorded previously. The Nifty was back then trading somewhere above the 7,200 level, and the analysis showed that Nifty was going to rise in the near term. It would bounce off the 7,000 and probably head back to the 8,000 level. So when the previous video was recorded, Nifty was trading at 7210, which was around February 22nd this year. And this next chart that you see is how price has progressed. As you can see, the Nifty index fell back to 7,000, formed almost double bottom, and then continued its rally towards the 8,000 level. As of this morning, Nifty is trading at 81.7215. So, okay, that concludes the Nifty index. This is the Renko chart that you see and how prices have moved. Now we expect a price to consolidate near the 8,000 to 8,500 level and start a new leg to the downside, which would then attack 7,000 and probably fall to 6,400 to 6,100 region. So moving on to Bank Nifty, just a brief overview for those of you who are new. The Bank Nifty, or CNX Bank, started in the year 2000, and it's traded on the National Stock Exchange of India. The Bank Nifty index is made up of 12 large cap stocks, mostly in the banking sector. And before we proceed, the disclaimer that everybody should know that this presentation is for educational purposes only and not to be misunderstood as an investment advice. Trading the financial markets is risky, so please consult your certified financial advisor for trading or investment opportunities. So we start with the 250 pip Renko chart for Bank Nifty. Before we begin, just a quick note that the Bank Nifty is currently trading at 17,421 at the time of doing this analysis. So what we have on the 250 pip Renko chart is a strong bearish divergence that is forming, with price making highs but the oscillator making lower highs. So this is the first sign that probably we could see a long-term correction. The support resistance levels are drawn. We currently have 18,000 to the upside, 12,000 as the first support to the downside, and 10,000 as the next support level. We also see that a top has been established after price briefly touched the 2000 level, and then since then you have lower highs being formed in price. I've used the median lines for this particular analysis, and as you can see, the downward sloping median line indicates that price is falling. You could see how we had a bounce here, and price has started to rally to the upside, and this bounce came on the bullish divergence that you see right here. So we've got our support and resistance level somewhere near 17,500 and 18,000. So we could expect to see some kind of a reversal here near this region, and maybe we could see a long-term correction towards the 12,000 level and possibly towards 10,000. So the bullish divergence that we see now is showing that prices could correct towards 14,500, and it also indicates that the price action is almost complete. So this is a level of interest. In terms of the declines towards 12,000 and 10,000, I expect this move to happen over maybe 2 or 3 months time. So this is not a trade that is going to happen quickly, so you need to have a lot of patience. Now we move to the weekly bar chart, and here we have some very interesting developments going on. As you can see, firstly, prices bounced off this median line and continued to move higher. You have this region of support and resistance right now, and that is where prices are. We expect to see some kind of consolidation take place within the 18,000 zone, maybe plus or minus 5,000 points, and the consolidation should result in an eventual decline lower to our first target of 13,000. On the weekly chart, here I've used a candlestick chart. I would like to alert the viewers that there is a potential inverse head and shoulders forming. Now we still have this section which needs to be completed. So this is still a pattern that is very young and evolving, and at the same time it could mean that the inverse head and shoulders could actually fail. We don't know yet. But an important point to remember is that prices could form some kind of a reversal near the 60,000 to 15,500 level, which I've noted right here. So right now you have the resistance at 18,000 and 17,500. So ideally you should see some kind of a retracement down and then prices pushing higher. If this is the scenario, then you could have a very bullish run up to the upside. So this is a risk that you need to bear in mind. On the daily chart, there is a bullish flag pattern that you see right here, and this signals a continued move to the upside. The minimum target you're looking at is 19,628. So let's round it off to maybe 19,000 or 19,250. So if this flag continues, you can have a minimum target towards the 19,000 level. So that is something again which you need to be careful of. When you combine this with the head and shoulders pattern, you can see that is the left shoulder being formed. This is the head, and right now the neckline is being formed. And for this pattern to be valid, we need prices to move back lower as well. So the question that you might have is, will prices go towards the 19,000 level, or will it fall towards the 15,500 level? Now that is something which we need to wait and see and understand how prices are going to evolve. But in terms of playing this move, look for some kind of a reversal near this region, and maybe look for a divergence which will indicate that prices will fall back. An important point to note is that if the bull flag pattern fails near this level of support and resistance, which is at 17,000, you could expect to see a very fast decline to the downside. So watch for 17,000 as your key marker. So when you see prices falling below 17,000, you can be sure that the bull flag will not be moving any higher, and that it would be falling back. So ideally, short positions below 17,000, targeting the 15,650 level, should be ideal. I would also advise that building positions near the 18,000 level will be good, with a very small position, of course. So in case the bull flag pattern fails, you can trade it to the short side. The risk is, of course, that prices will break above 18,000 and move to the 19,000 level. In the longer term, which I mentioned in the previous slide, that the bank nifty could fall towards 13,000, 12,000 and 10,000 levels. We need to then wait for the inverse head and shoulders to fail as well. So a continued move below this level, we'll see a move towards the lower support levels. So there are a lot of factors in play. And right now the chart patterns show a bullish continuation and at the same time an inverse head and shoulders pattern. So the resistance level of 18,000 to 19,000 is definitely worth keeping an eye on. You could look for reversals there and start building the short positions for an initial move to 17,000 followed by a move to 15,000, and then wait and see what price will do. If it starts to reverse again and move higher, you might expect to see prices posting higher highs, and maybe we could see a close above the 20,000 level as well. So I hope the analysis for Bank Nifty is clear enough for you guys. If you have any questions, feel free to write to me on the comments and I will respond to you. Thank you very much. This is a presentation from Renko Traders.